Bismillahirrahmanirrahim. I'm Noriza binti Muhammad Saad currently from Uniten, University Tenaga Nasional. And in March, I will join University Teknologi Mara Cawangan, Kelantan. So today I would like to present my research paper on the title, The Effect of Green Technology Tax Incentive Announcement Towards Stock Return in Malaysia. So this is my biography. As what I mentioned, I'm currently at the University Tenaga Nasional. My research area basically in the Islamic capital market, corporate governance, capital structure, business financial performance, tariff optimization, as well as sukuk market. So as a summary of this paper, represented by abstract slide here, the focus of the study is to analyze the reactions of the stock returns among industrial product and service sector after the announcements of extension of green technology tax incentive in Malaysia. Therefore, the main objective is to investigate the abnormal return existence of stock price of companies in the sector after the announcement of extension of the green technology tax incentive until 2023. So under this initiative, green technology, there are two initiatives highlighted here is GITA, stand for the Green Investment Tax Allowance, and also GT is a Green Investment Tax Exemption. So a sample of 40 companies listed in Bursa Malaysia from industrial product and services sector was collected, represent 30% out of the total sample. And then stock return for 121 trading days from 24th April 2019 until 24th October 2019 was retrieved from the Thomson Reuters, and the announcements made on 10th October 2019 by the former Ministry of Malaysia Finance, Ministry of Finance Malaysia. And the estimation period of this research is 100 days plus with the event window of 10 days after and 10 days before, plus the announcement day become 21 days. Based on the result after computing the abnormal returns and tested with the t-statistic, this research found that there is a significant increased trend of the stock price in 10 days after the announcement, but the stock returns are under negative level. This suggests that the stock price is decreasing after the announcements. So Malaysia government implemented this tax incentive actually as one of the effort to achieve 20% of renewable energy mix targeted until 2025. So under this description, I highlight a main issue whereby in 2019, as what I mentioned earlier, Finance Ministry was delivered a good news for the green investors and as well as green business persons. He announced in Budget 2020 the Green Technology Tax Incentive in terms of GITA and GT continued until 2023. So the objective of this extension is to achieve 20% of total energy production by renewable energy. However, in this announcement of extension of green investment tax allowance and also green investment tax exemption would affect the stock return of the companies listed in industrial product and services sector. So due to this issue or curiosity, this study is motivated to investigate the industrial product and services companies, specifically for the 40 companies, stock return changes to the extension announcement of the GITA and GT. So move to the data and methodology. This study utilized the secondary data, And event study approach also was utilized, whereby the random walk theory was specifically applied in the study to analyze the changes in the stock return of 40 industrial product and services companies after the announcement of extension GITA and GT. So 110 trading days before the event, which was on the 10th October 2019 until 10 trading days after the event. So this study is using 21 days event window is because this period highlights the reactions of investors toward the announcement. If longer period in event study approach, it will mix up with other events or market noise, meaning that there is interaction or anything that will jeopardize the news or announcements of the GT and GT. So, the sector are classified as a big polluters company with many carbon holes to be covered with the green technology. Majority of the company in the sector are heavy manufacturers and potentially producing non-environmental waste. The Bursa Index return for the respective periods are taken to be compared to the returns of the company. So, in order to calculate the returns, basically we apply this formula, alpha plus beta for the returns as represented by the share price of the company plus the error term. And then after that, we proceed to calculate the abnormal returns. From the abnormal returns, we sum up all these figures by using the Excel computing. Then we calculate for the CARR, that is a cumulative abnormal returns. So as a theoretical framework for the event study, the event window was shown as this timeline whereby 0 days is the event day or announcements date as represented by 10th October 2019, and then 10 days before indicate negative 10 days, 10 days after the announcement indicate by positive 10 days. All right. Then the result and discussion for the AAR 121 days abnormal return shows that the graph is very fluctuate. The patterns of ARR for the industrial product and sector in the total estimation day is 121 days is random, and it was follow the theory by explain. It follows the theory explained by the random walk, whereby the price is fluctuate. We can see from this graph, at a certain date or certain period, the price at the positive, and at the certain date of the announcement, the price become negative. So it shows that for the investor who are risk taker, they will take an initiative or will make an announcement, will make an investment, even the price at the decreasing level, at the negative level. But for the risk adverse, normally this type of investor behavior only want or eager to invest at the positive point or positive level. So go to the CARR graph here. It shows that the CARR for 121 days of the sector is actually leveraged to the negative abnormal return. We can see from this graph, there is a below then a zero line, and the patterns just at the negative 20 day indicate a positive, and the rest of the period indicate the negative abnormal returns. All right, so from this AARR and CARR, then we merge these two patterns into the window event as represented by the next graph, ARR and CARR graph, that is merge between these patterns, between these two patterns into the window event for the 10 days before and then 10 days after. So As a conclusion, this research identifies the reactions of the stock returns towards the announcement. This is proved by the significant cumulative average abnormal return value of the T statistic. The stock return was decreasing before the announcements period, that is from negative 10 days or 10 days before the announcement to a day before the announcement, and increasing after the announcement period, there is a day towards 10 days after. The stock returns was decreasing along the 10 days before the announcement, might be because investors become risk adverse and decided to wait for the announcement before reinvest in stock that benefit from the announcement. Therefore, the increasing trend for 10 days after the announcement may be because of the company in the industrial product and services sector are adopting the green technology, either GT or GITA, and the investors predict the investment will produce return. Thus, companies should be more patient because to convert the investment in green technology into a profitable returns in their investment would take time, about more than a year, or until the announcements date happens, not only within the window event study. So with that, I thank you.